Up next, let's turn our time here at the broadcast over to the markets. Many producers around the state and frankly around the nation expecting good yields this year. However, as corn and soybean prices continue to take a bit of a hit, many producers continue to wonder when that might turn around. We had the chance to ask that question to Heather Ramsey. She's with the ARC Group right out here at the Nebraska State Fair. Here's our discussion from Wednesday. Heather, good to see you here at the Nebraska State Fair. Thanks for coming out and spending some time with us to discuss the current prices of corn and soybeans. You love talking about current prices.
Why not?
Not these prices, though.
No.
Bring us up to speed. What's been happening in both markets?
Oh, it's been kind of a seesaw over the last couple months, honestly, with us going a whole lot of nowhere in that mix. Last week was probably one of the most impressive soybean corrections we've seen in quite a while. When you look at kind of the 2-week pricing window on soybeans, there's about an 80-cent upward movement. Now, when I say 80 cents up, you think, yeah, I'll have a great number to tell you, and I really don't. We did breach over 1060 futures at one point last week, and we're hovering not too far off of that. When you look at the charts from soybean standpoint, we're in that upper segment from a pricing standpoint, and even though those numbers don't feel real great, it's probably been an opportunity. It's just hard to get too excited about it at this point in time, honestly. Shockingly, corn, I don't know if you've seen the headlines price, but this is the best corn crop we've ever seen in our life. It's the best of the best. And even with some reports that say maybe it's not, corn is continuing to hover right between $4 futes, $4.10, $4.12 maybe. For as massive as this oversupply has been talked about, the fact that we're sustaining numbers above $4 futures is quite honestly impressive in the December corn futures market.
Let's talk about corn. You're bringing up the headlines. We had USDA's surprising August report, putting a yield projection at 188 nationwide and some change. Pro Farmer wrapped up their tour. I think they came in less than that. Do you think USDA comes out with a lower number in their September report?
I have a feeling there's some adjustment. I think the farming community looks at Pro Farmer and thinks, yes, 182, we told you. When you look at the data from Pro Farmer and like year over year, kind of where they end up versus USDA, they're probably a little low. It probably warrants a better evaluation by USDA and maybe correcting that a bushel, 2 bushels to the acre. I don't think we're going to see them drop clear back down to 182, sure, 183, anything like that. But usually this is the biggest the crop is, usually. But we've seen some very interesting numbers at a USDA at odd times of the year. You know, that August report you mentioned, not a soul was thinking, hey, we're going to get an increase in corn acres, and we did. And so there's just some concern over what new information comes to light from USDA in these next couple months of reports.
On the soybean side of the equation, the story of 2025 is who's not buying. The number one buyer of U.S. soybeans has not bought beans.
Yeah.
And that trend continues. There's no new trade deal with China that's been announced out of the nation's capital. Yeah. But what kind of impacts is that having on the cash market, particularly the markets that would supply the PNW?
Yeah, and I will add to your headline news here. This week we get an announcement that China's going to sell off government stocks internally, which is another huge sign that they're saying, hey, no worries, you're not going to need to buy from the U.S. You buy from our government surplus. So that adds on to it. And from a standpoint of like here in the Midwest, here in Nebraska specifically, we've become very accustomed to really good competition actually in Nebraska for soybeans between elevators and processors. But when we don't have a PNW market for rail, that really means in the Dakotas, where are you going with beans? You got to find a different home. There's some of those elevators that are no bid for new crop beans. And so that's going to send some beans further south. We are expecting to see South Dakota beans kind of come into this Nebraska market. We're expecting even our commercials here, rail loaders on the UP, that volume is just decreased. They don't have to compete as hard, which means the processor doesn't have to compete as hard. And when you look at central Nebraska, well, any processor in Nebraska really, we expect to see harvest basis at a processor somewhere in that 25, maybe 35 under. We're short acres, smaller crop than normal. We should see that same number, except for all these factors affecting demand. We are now seeing 50 under. So this is a full 25-cent different, basis value than what we've become accustomed to over the last couple of years. That 25 cents, when you have futures where they're at, Woo, that adds up in a hurry, and cash prices on soybeans are just not friendly to the farmer at all today.
It's hard to imagine that changing until something with China would be announced, correct?
Exactly.
All right.
Yep.
Well, we've not had the rosiest outlook. I guess you did say something positive, the fact that corn is above $4 still with all those factors.
Corn's
And
above
we saw
$4,
we saw a nice rally in soybeans. Let's talk harvest decisions, though, as folks are going to be hitting the fields here in the next few weeks. What do you want producers to know about managing the grain that they're going to be harvesting?
You know, I think there's been a lot of sensationalism built around this crop is so huge, no one's going to be able to handle it. There's some truth to that. You know, it's a little bit bigger corn supply than what we've been seeing the last couple years. We've had some significant droughts here, so this is a little bit of a change. I think one of the things that guys can do to protect themselves and make sure they have a home for things is think about, what do I have for on-farm storage? Do I hit it before I hit my elevator? Do I hit it after that market? And if I'm going to hit the elevator market specifically in this October window in the state of Nebraska, have those delivery locations booked up and in an aggressive yet comfortable volume. So when I talk about that, I say, what's going at harvest? All right, let's get 80% of that a home on it. Because we still have a little time to get there.
Yep.
Obviously, it's only the end of August. So we're talking about making sure those logistics are locked up. The last thing I want to do is get a call from a farmer that says, my elevator went contract only, when we could have prevented being in that situation by just acknowledging what we wanted and writing that basis contract at least, so that we know we have a home. And as soon as you can start looking at overall yields, start figuring out what your new break even actually looks like. So then, is pricing $3.85 cash corn that bad versus I wanted $4.35 when the new number is actually right at $4? You know, so trying to figure out where the happy medium is on what needs to go to town, what needs to get spotted, generate cash flow, manage your interest costs and all of that. I mean, those are going to be really, really key to getting through the end of this year and going into next year for planning.